Hello friends, today we are going to discuss about income of in the case of different category, that is ROR, RNOR and NR. For that we are going to take one full example. So X furnishes the following particulars of his income on during the previous year relevant to the assessment year 23-24. So first of all we will take first example. So interest on German development bond and 250 is received in India. So now you have to tell me whether it is first of all you have to identify whether it is Indian income or foreign income. So when you can consider any income as an Indian income, when it is received in India, when it is accrued in India, if both the things are happening in India, then also it is considered as Indian income. So here it is a German development bond. So that is sure that it is accrue or arise outside India. But now you have to check where it is received. So it is received in India, but not full amount is received in India. Only 250 is received in India. So in that case, you have to make two parts. First of all, interest on German development bond. So here you will make two part. 2/5 is taxable on receipt basis, that is it is received in India. So if you make 2/5 of 60,000, so 60,000 into 2 upon 5, you will get 24,000. So 24,000 in taxable in all the case category, that is resident and ordinarily resident, resident but not ordinarily resident, and non-resident. And for that we have to refer note 1. So what is written in note 1? So it is Indian income and it is always taxable. Now Indian income is always taxable because it is globally taxable. Now second one, 3/5 is taxable in case of resident and ordinarily resident in on accrual basis. Accrual basis means what? It is foreign income. Why it is a foreign income? Because nothing is said about receipt, but it is accrue or arise outside India because it is a German development bond. So that is why this 36,000 will be considered as a foreign income, and that is taxable only in case of ROR. So this is the first point. Now second point that we have to discuss is about income from agriculture in Bangladesh received there. So this information is very important for us. Okay, that is it is a agricultural income received in there. That means what? Accrue or arise outside India and received is also outside India. That is it. That is why on the basis of this information we can say that we can make out that it is a foreign income. But later on this 50,000 is remitted to India. That means what? Now it is remitted, so we don't have to consider this because remittance is not taxable at all. So you have to see or you have to look where it is accrue or arise and where it is received. So in the first example, it is very clear that it is accrue or arise in Bangladesh and received that. That means it is a foreign income. Then agricultural activity is controlled from Bangladesh. So remember, controlling is not the criteria to decide the whether it is Indian income or foreign income. So this 1,81,000 is considered as foreign income and it is taxable only in first category. So that is why here note is written, income from agriculture in Bangladesh, income accrue and received outside India. So full 1,81,000 is taxable in case of ROR as it is a foreign income, and remaining two category it is not taxable. Now next one, third point is income from property in Canada received outside India. So it is a property income in Canada, that means accrued outside India and received also outside India. Then rupees 76,000 used in Canada for meeting educational expenses of ex daughter in USA, and 10,000 is later on remitted to India. Again, remittance you don't have to consider this point, and for which purpose you are spending. You are spending for educational purposes, so that is also not important information for us. We have to decide whether it is Indian income or foreign income only on the basis of this income from property in Canada received outside India. Once again, I am repeating the concept. When you can say that it is Indian income and foreign income, so when it is received in India, it is Indian income. When it is accrued or arise in India, then also it is Indian income. And when both the situation is happening in India, then also it is Indian income. And here, property situated in Canada, that means accrue or arise outside India and received also outside India. So that is why this full income is foreign income. So this 86,000 is taxable again in the first category. So income from property in Canada received outside. So income accruing and arising outside India. So there is 86,000 is taxable in case of first category. That is why, because it is a foreign income, and remaining two category it is not taxable. Now next point, that is very important, income earned from business in Canada, sorry, Kampala, Uganda, which is controlled from Delhi, and rupees 15,000 is received in India. So here business is in Kampala, Uganda, and a business is controlled from Delhi. It is a very special point. You have to take, you have to understand this point very thorough, in detail. If 15,000 is received in India, so we will not discuss anything more about this 15,000, as 15,000 received in India. So that is why this 15,000 is taxable in fully taxable, and it is taxable in all the category as it is a Indian income. So that is why they have written income earned from business in Kampala, control from Delhi. Rupees 15,000 is taxable on receipt basis. So here we have written 15,000, 15,000, 15,000. Now balance is not taxable in case of non-resident. Now you have to pay attention to this point. Business is controlled from Delhi. Again, once again I am repeating, controlling will not decide that it is a Indian income or foreign income. So just controlling, you can't say that it is a Indian income. So income is earned from business in Kampala, and you have received remaining amount in outside India. Means only 15,000 you have received in India, but remaining amount you have received outside India. So business is in Kampala, that is outside India, and balance amount is also received in outside India. That means both the situation is arising outside India. So that is why this balance is 100% foreign income. But this is a special type of foreign income in which business, it is a income from business, and if it is a income from business and business is controlled from Delhi, so even though it is a foreign income, it is taxable in two category, first and second. तो आपको क्या याद रखना है कि अगर ये बिजनेस इनकम है और अगर बिजनेस का कंट्रोलिंग इंडिया से हो रहा है, तो वो आर ओ आर एंड RNOR में टैक्सेबल होगा। यहाँ पे इसको इंडियन इनकम नहीं बोलेंगे। कंट्रोलिंग विल नॉट डिसाइड दैट इट इज ए इंडियन इनकम, it is a foreign income because Kampala is outside India and received also outside India, so that is why it is a foreign income. But as it is a control from Delhi, so that is why it will become, it is taxable in first and second category. So this is very important point, and for that you have to see the note 4 also. So what is written in note 4? It is accrued outside India and it is received outside India. So though, look here, both the things are happening outside India. It is a foreign income, no doubt in it. It is taxable in the case of resident and ordinarily resident taxpayer. It is not taxable in case of non-resident. Since it is a business income and business is controlled from India, it is taxable in the hands of resident but not ordinarily resident taxpayer. So this is very important information which is given in the material. So because it is a foreign income, even though foreign income, it is taxable in case of RNOR as business is controlled from Delhi. Now dividend paid by a foreign company but received in India on April 10, 2022. It is very simple transaction. It is dividend paid by foreign company, so it is accrue or arise outside India, but income is received in India. So 46,500 is taxable in all the category as it is a Indian income. So now no more discussion on this point, very simple point. Next point, past untaxed profit of 18-19 brought to India in 2022-23, 10 lakh 43,000. It is not an income at all. ये आपका income ही नहीं माना जाएगा because it is a remittance of income. Past untaxed profit brought to India in 2022-23. तो हम क्या लिखेंगे इसमें कि not an income for the previous year 22-23 relevant for the assessment year 23-24, hence it is not taxable. So we have not tax in any of the category. Now next one, profit from a business in Madras and managed from outside India. So here profit is from business in Madras, that is Chennai. Now it is managed from outside India. Now it doesn't this information will not decide that it is a foreign income or Indian income, as business is from Madras, so that is why it is a 100% Indian income, because business is in India. So straight way we can say that profit from business in Madras and managed out from outside India, income accrued in India, so it is, that is why it is a Indian income. So as it is a Indian income, it is taxable in all three category. Now next one, profit on sale of building in India but received in Sri Lanka. So here also building is sold in India and received in Sri Lanka. So profit is arising in India. That means income deemed to be accrue or arise in India. Deemed to accrue or arise in India. Why deemed to be accrue or arise? Because property is situated in India. So even though amount is received in Sri Lanka, so that then also it is considered as Indian income and taxable in all three categories. Now next one, pension from a former employer in India received in Rangoon. Now profit, now pension from Indian former employer received in Rangoon, income deemed to accrue or arise in India as it is paid by Indian person and it is received in Rangoon. So that is why 36,000 is considered as Indian income and it is taxable in all the category. So once again, pension from a former employer in India and received in Rangoon. So it is a Indian income because it is paid by employer who is residing in India. Last one, gift in foreign currency from a friend received in India on January 20, 2023. 80,000. So gift above 50,000 is taxable. If it is less than 50,000, then it is not taxable at all. We will not consider it as a income. But here it is a gift from friend, it is not from relative. So it is taken as an income as it is received in India and it is an Indian income. So 80,000 is taxable in all the category. So here we will read down one note. If aggregate amount of gift or gifts received by individual or HUF from all person not being relatives during the financial year exceed 50,000, it is taxable as income. So it means वो पूरा का पूरा taxable हो जाएगा. If it is 50,000, less than 50,000 or 50,000, then we will put here dash. But as it is more than 50,000, then full amount is taxable. Now this question can be asked in the exam. Now what you have to do, you have to make total of each and every category. You have to write down the title of the question in a proper way. Computation of total income of X, if he is a resident and ordinary resident in India, resident but not ordinary resident in India, and non-resident in India for the assessment year 2023-24. You have to write down this title in full, don't write down in short. You have to write down rupees also. Yeah, this question can be asked in 7 mark, 8 mark or 10 marks. So you have to understand this, the concept understanding is required to do this sum. It is very easy sum. If you have any doubt, you can write down uh, your doubts in a comment box. I will try to make reply for the same. Thank you very much for watching my video till end. Have a nice day. Bye.